And welcome back to Prescribing Prosperity, the podcast hosted by John and Alex Soutsos. Gentlemen, this is part 2 of a fascinating conversation, continuing off the last episode, diving into this time around AI and the markets, a topic in which has been kind of hot lately. A lot of opinion about overvaluation, creating a lot of volatility in the market. So I'm relying on you to bring some just commonsensical evaluation into all of this craziness, John and Alex. I don't want to put too much of a burden on you, but with that, it's yours to take away.
Well, thank you, Bill. We're thankfully we have 3 sets of shoulders to carry the burden here, because Rana is going to help us carry the load as well. So it was a great first half chat with Rana in part 1, and now we're going to continue in part 2, where we can really dive deep on AI. And I feel like I've been a jockey that's been waiting for the to let Rana go full bore, holding them back so that way he can win the Kentucky Derby and go for the Triple Crown, because this is a big topic.
Yes. Just before you get started, Alexander, for those people who missed our episode 1, let's just reintroduce our guest, Rana Chauhan, President and Chief Investment Strategist at Victory Hill Capital, and former Chief Investment Strategist at Investment Planning Council and Council Portfolio Services. So with that, I'll turn it back over to you, Alexander.
Thank you. So, so Rana, as we left off, I want to let you finish, first of all, talking about, in your perspective, before we get into the narrative about the bubble itself in AI. I want you to fully, give us your big picture. Where are we in AI as far as, are we in the first inning? Are we in the 7th inning? Are we in the 9th inning? Where would you, to use a baseball analogy, where would you place us in the AI world?
Can we first clarify that we're talking about artificial intelligence and not artificial insemination? Right?
Yes.
Just so that we clarify that we're talking about the right AI.
Yes. We are not advocating for the insemination of life into people are using artificial methods, or that's not what we're discussing.
So we're talking about the right AI. So we've learned how to spell AI, right? Okay. We're really early on. We're at the chip stage. All right. We're not at the software stage yet. All right. It's not into general usage yet. So people have gotten a little toy on their phones called ChatGPT, and they ask them silly little questions, but they're not increasing their productivity yet. They're not saying, okay, remind me when my license is going to come overdue, send me a reminder, or book my appointment with this person. Here's my meeting notes, summarize that and send it to my group. We're not really at that stage. We're at the very, very early stage of this. So if you're having a baseball game, we've just finished the first innings. All right.
Agreed.
We haven't even stepped in the second innings yet. All right, we just gone around the bases once, maybe we've had a couple of balls out. All right, we got a few runs in, with some stocks there. But the major part of the game hasn't even happened because, think of it, on March 23rd, we heard about a Chinese company called Deep Search coming in, and it's going to totally destroy the U.S. market because it's so much cheaper. And the market panicked. Well, guess what? Nobody talks about that company anymore.
No. DeepSeek is a long forgotten narrative from 9 months ago.
So that was like a baseball player coming on, everybody thinking they're going to be wow and they're going to take, the whole series, and yet they busted.
Yeah. One hit wonder.
So again, we're really early on. It hasn't got into the deployment of cars yet. Things that we use daily, like fridges, cars, it's in your phone. That's about it. Yeah. But when it gets deployed into cars, and especially GPSs into instant framing of traffic, like think of Waze, all right, and that AI on it. Waze depends on the human person to tell you that there's a policeman up ahead.
Yeah.
Right. Well, AI doesn't need that. As soon as the football shows up, they'll be out.
Mhm.
All right.
Well,
So
I
we're
loved
that.
your analogy, Rand, of the housing stuff. Like I thought that was such a great analogy where you talked about the infrastructure around your home. What about even just in the home? Like how about the idea, one of the things that drives me nuts is HVAC. You one part of the house is warm, the other part of the house is cold, and depending on what time of the year it is, that's either a good or a bad thing. And so you're trying to always balance it. Imagine that you had AI that is automatically sensing the temperature in each room individually instead of just one
Mhm.
centralized hub location and saying, I'm going to turn on the heat. We're in the winter now. I'm going to turn on the heat and direct it only to this one room because all the other rooms are fine. I can sense that these rooms are okay. Let's only direct it here. Or, to use your example of the fire department, well, you're going to pay lower property tax because you live further away from the major infrastructure, so you're probably going to utilize it less, and therefore you shouldn't have to bear the burden of that as much. And so it's going to
Yeah.
constantly
All the school.
evolve. And so you're going to
Yeah.
have this
So
evolution
so
of
we're at
how.
the very early stages.
Right. Right. Okay. So, in terms of being in the early stages here, Rana, this narrative has obviously moved it into the financial arena, which we all play in, and so we've heard a lot about the potential for an AI bubble, how this might be just like the .com bubble that existed in the early 2000s. What is your perspective as to whether or not we are approaching bubble status?
Well, there is an overexcitement level on how fast things are going to happen. So they're
Hmm.
thinking that it's going to happen right away. And
Hmm.
things happen kind of like in little blips. They go nowhere for a while, and then all of a sudden they're there, and then you see the big jump up, and then the next stage. So it's kind of like a plateau. You go there, then you go up, then you go there, then you go up. Whereas everybody's pricing this whole thing in a few companies now. So yes, in some aspects, there is an overvaluation because of all this options market and everything jumping in. And it'll take a while, and you'll realize that these prices were actually very sane, but they were just early.
Hmm.
All right, the pricing is right. The earning, as soon as the profits start to show up, it'll start to be there. The companies are spending real money on it. It's not pretend money.
Hmm.
Okay, they have cash flow. So these things called hyperscalers, which is the Amazon, Google's, Meta, they're not borrowing money to do this, which is what was in the internet world. All
Hmm.
right, they were borrowing money to do it. This is real cash flow that they have that they can spend to build this, and they have a longer than a 5-year runway for it. So they can put the capital now knowing that it's there. Our usage of data centers is going to be increased. Our grid, our electrical grid right now needs to be improved huge. Okay. So you will see it improve. You'll see it change the format of it. There's something that you mentioned that was interesting. When you talked about the houses and trying to change the rooms in it, well,
Hmm.
that's difficult on an HVAC system, but it's very simple on a Tesla Powerwall system.
Hmm.
All right, very, very simple to adjust it for each room on that. So you're going to see AI and Powerwall take over from the traditional HVAC system.
Right.
All right, which is, instead of your HVAC and the rotors going, you just take out a battery and put in a new one right there in your power wall.
Yep.
Starts to work. So the valuations is being built up a lot by media. All right, I believe that there's certain pockets of overexcitement, but that excitement will actually come out to be true as you give it time.
Right.
All right. We look at when we started off with the internet, we couldn't see Amazon, Google, and all that stuff. But eventually, as they took on, that helped the search engines and they hit the prices that were expected early on. So,
Yes.
yeah, I believe that there's still a long way to go yet.
So, do you believe that one of the things that, based on the MIT paper, which kind of sparked a lot of this narrative around the AI bubble theory, is the circular funding loop that seems
Okay.
to occur within the AI industry and the AI landscape? What is your perspective on the notion of a circular funding loop?
Every industry that's major change in the world, starting from steam, has had circular funding. Circular funding mean I'll give you the railway as an example. The steel, they had to lay steel railway down for the trains to go on. All right. Well, so they would fund the steel. All right. And eventually the trains will go in, and then eventually the customers would pay for the train that would pay for the steel, and then you would get transportation. Okay. Henry Ford, right, funded the engine to put into his car. There was circular funding for the pistons and all this stuff, and then the roadways. All right. So circular funding has always been there in every industrial change. It's not
Absolutely.
something new. Okay.
And, you're absolutely right. Another example is Rockefeller, John Rockefeller.
Yeah.
John Rockefeller was looking for ways of utilizing petroleum as inputs into different. It wasn't just as an energy source in terms of oil and fuel consumption. It became used in plastics. It became used in pharmaceuticals, and so he
Yeah.
spent
Perfect.
part of his career building out other industries. So he had other applications for the product that he had in abundance. And so, you talk about the opportunity for a circular funding loop to occur. This is not anything new, as you mentioned. This is something that has existed in previous industries for a long, long time. And another one of the topics that they talk about is concentration of power. In your perspective, is concentration of power if indicative right now of a funding or an asset valuation cliff?
Concentration of power. So the power grid needs to be improved, and only some companies will be able to do it because they have the money to do it. Okay, now the government will have to help in there as well. But when these companies are large enough that they can do this, well, that stops other people. Other people can't jump. They don't have the capital wherewithal to do it. All right. So I believe that the energy and power is going to be one of the main drivers and the change of it going into the future. All right, that you're going to need this demand. And so if you have concentration amongst a few people that can actually do something, all right, then it'll work out fine.
Absolutely. And so, I think you touched upon this a little bit already, but how does this compare to the tech bubble of the early 2000s? I think one of the things you talked about was the funding based on debt. Are there any other
Yeah.
kind of contrasts that you can draw, or
I
similarities that
can.
you can
It's
draw?
earnings. It's earnings.
Okay.
So what happened in the 2000 was it's a new thing. Remember the thing about the 2000s that everybody forgets is we had Y2K.
Mm-hmm.
So you had the freak out. All right. And then you woke up the day afterwards and you go, there's no freak out. All right. Everything's still good. So then all of a sudden you got this euphoria that, look, I didn't die. My clock didn't stop. Right. The
Planes didn't crash, escalators didn't stop, elevators didn't drop.
So you got
This is
this
a nonsense.
euphoria about it. And so what happened is everybody got, oh, well, the internet solved the problem of it. The internet didn't solve the problem. Well, the internet was there before. But then that fear of, like we saw that not go on, what they told us. The media was crazy about Y2K. I'm just letting you guys know, for the next one, I'm ready. Y3K is not going to hit me. I'm just going to I'm totally prepared for Y3K. But so
Rana, we might have a quantum leap and get there sooner than you expect.
Okay, I hope not. But so what I'm trying to say is that there was so much optimism built in small amounts. So you had Cisco, whose price shot up, but its earnings never shot up. So the earnings never justified the price. So that was a classic of, you're not making the money to do it. Whereas now, NVIDIA is really selling these chips, right? It's not, they're not giving somebody and saying, okay, hey, buy my chips, I'll pay you. It's use my chips. I believe in what you're doing. I'm investing in you, hard investment. You're going to use mine to create something else, and we'll share the profit. So earnings of NVIDIA are real, whereas earnings of Cisco weren't real.
Yeah.
So you got to follow where are the earnings real and where is the cash flow. Cisco didn't have any free cash flow at that time. All right. And then you saw later on companies that were playing around like the WorldComs of the world, which were just doing acquisitions for the sake of acquisitions, JDS Uniphase, you had Nortel then, all right. But they really weren't doing earnings. They were playing accounting games.
Yeah.
All right. Right now, you are seeing actual earnings and not counting game, and you're seeing buybacks happen with real cash. So this is a big difference between the 2000s and now. Right. Accounting's gotten better.
Absolutely. Absolutely, it has. And so, what do you see? You've kind of already touched upon a little bit, but what do you see going on behind the scenes with these companies? Which companies do you feel are best positioned to emerge from this, the first inning of AI to succeed in the coming years?
So we're going to see more utilization by us. You're going to see more utilization by the big companies. Let's think of Walmart as an example. It's going to use AI more in its logistics, areas like that. You're going to see those. So it's going to improve the productivity of basically all the companies that we look at. Amazon, Walmart, even Netflix now, right? All these. So you're going to see a generalized improvement in productivity.
Hmm.
Okay, so now you're going to say, okay, which are the companies that provide that information to them? Well, then you're going to have to go back to the data warehouse and the data centers, which all of them are going to be using. So data center companies are going to be important. And then data centers are going to need energy to it. So that will mean the cooling aspect, the turbine aspect. Companies like GE Vernova, which is a big energy company, Siemens in Europe. Data centers. Now you're seeing data centers in the Middle East. All right, you're seeing something very interesting called carbon capture in the Middle East, where they take the waste product of natural gas used for data center and they convert it into animal grade food feed, which was so previously it was a waste item. Now it's
Hmm.
becoming food feed for animals.
It's
So
an
you
input.
can sell a waste product as a food feed. And so you're beginning to see changes in productivity happen along that way. But if you're asking for specific companies, then I would say they're still the leaders. You're still going to get the hyperscalers. The database companies are going to be even more important than ever before. The security companies are going to be important. All right. Again, I'm not recommending, but the
No, no.
Palo Networks of it, the Palantirs of it, the Oracles of it. All
Hmm.
right. So
I,
these are all
Sorry, I
great.
want to interject right there, Rana, because you brought up a subject that is missed by a lot of people. And in economics, we have something a term called Malthusian economics, and based
Yeah.
on Robert Thomas Malthus's writings in I think it was the 18th century, and he was projecting large-scale famine and global conflict over reducing or a limited supply of food. What he didn't anticipate, and what proved his theories wrong, is the innovation in terms of
Mhm.
farming and mechanization. And that's exactly what you just described here, where there's this new technology converting gas into something that's useful. And so there's a lot of these innovations that have not even been thought of yet, that
Mhm.
are going to allow us to adapt to changes that today may seem like obstacles, but eventually will pave a pathways to future growth.
Yeah. And you're getting countries that were known for nothing being known for something now. And I'll give you a perfect example of that is Dubai. There's no oil in Dubai. All right. And yet they took this whole piece of water and created land out of it. And now you have the palm, and now it's a beautiful place to visit. It's a tourist site. You go to Qatar. 20 years ago, all they did was pearl diving. That's what they were known for, pearl diving 20 years ago. Now it's a beautiful country doing everything possible. Leaders in finance around the world doing crazy, crazy good. The government of Qatar, the Qatari Sovereign Wealth Fund, owns more real estate in London than the royal family does.
Wow. Isn't
All
that
right,
something?
that's crazy. They own more of London, Grosvenor Square, everything. That just tells you how they're improving and how they're investing their money outside into other ventures, and they're doing a lot of good. The big data centers are being built there. You have to go there to see it. Sitting here, we don't see it. All right. But the world is actually getting better and better and better. Right. And all we hear about is conflict with China, conflict with Palestine. You hear a lot about the conflicts, but you don't hear about what's happening good out there.
Well, you just brought up a great one
You
there.
mentioned, I mean,
I was just going to say, you mentioned
I was gonna,
Palestine. Israel is one of the leaders in technological innovation in the world, but you never hear about it.
Yeah.
All you ever hear about it is the conflict in the Middle East. But they're
Security.
actually one of the greatest innovators on the planet.
Yeah.
well, and that's a good point, Alexander. But another point that Rana brought up was China. So, for those of us who pay close attention to global events, current events, big discussions about China being the competitor to the United States. From my reading, China is actually their economy has been deteriorating and is continuing to deteriorate at a rapid rate. And in fact, their population is imploding. Their population is shrinking and is expected to shrink very rapidly in the next 1 and 2 generations because of their one-child policy. But
Yes.
recently I read somewhere that we don't actually even know what China's population is because we can't trust the Chinese Communist Party's statistical data. So are they still 1.4 billion people, or are they actually 800 billion? Sorry,
You won't
800
know
million
that.
people,
You
right? We
won't know
really
that
don't
too.
know.
Because the death rate isn't really disclosed. But here's the thing about China that we do know. They had Evergrande as Evergreen as the bankruptcy of real estate. And just about a month ago, they had the second largest real estate company say that we can't pay our bond anymore. All right. So you've got real estate is crashing in China. You don't hear about it here. Demographics, they have far more older people than younger people to take it on. All right. Now they do still have a lot of people. I'm just picking a number. Okay. So the other thing is China is not known, modern China is not known for innovation. They're known for duplication. All right. Taking something, but they didn't invent the iPhone. They copied it. Huawei. All right. They didn't invent the EV. They copied it. They improved it. Okay, fine. They did it, but they didn't create it. They didn't create the search engine. They copied it. So China's always played number 2 to innovation, which is an entrepreneurial spirit in the West, in America. America is built on entrepreneurism. Canada isn't built on entrepreneurism. We did have it. It's called BlackBerry, and then it got killed. Right? We had it with the Avro airline, and we got killed.
Yep.
So if you want to follow countries that are going to be doing well, it follows innovation. The same thing with Europe. There's no real innovation happening in Europe. They also have a demographic problem.
Yes.
Okay?
And they have
So
a bureaucracy problem as well.
Well, that's their innovation is more bureaucracy.
Yeah, and so they're making money out of fining internet companies. So the internet company says, fine, we'll just stop dealing with you now. Let's see how you do then.
Yeah.
All right. And
Exactly.
Canada did it as well. We did it with our news media, right? Oh, you can't post this because they couldn't figure out how to make revenue out of it. So they banned it.
Yeah. Or they charged the digital tax, the digital sales tax, and U.S. companies started to say, well, why the heck do we want to go and deal with Canada? Then we're just it's becoming punitive, financially punitive to deal in the Canadian market.
Yeah. So this is a VPN starts to grow then.
Yeah, exactly, and that's actually a great
it's
point.
Always a way out.
Yes, I've noticed my VPN uses has increased, but the one thing I wanted to ask you, the last thing I wanted to ask you as it relates to the AI market is, where do other markets fit in terms of their development and adoption of it? You started to touch upon it. I want you to dive a little bit deeper. We've seen it's very early days in places like Japan and the Middle East. How do you see that evolving in the next 10 to 15 years? Do you see that becoming more of a large scale innovation in those places, or are there other markets where you're looking for AI innovation to occur?
So when you look at Japan as an example, Japan is a very technical, mechanical country. That means that they rely on. Let's think of it. You had Sony, right? Sony machines, all right. There was no Sony AI. It's not a software. It's a hardware. You had Hitachi, again a hardware. You had Nikon cameras, which is hardware, all right. But Japan is not known for software. All right, so AI is a software evolution rather than is a hardware. They didn't really come with the chips as much as them, so that's fine. That's Japan. China is a duplicator, so they'll be second to it, and then that's it. Where innovation is actually happening in the East is actually in India, right? Because if you look at the CEOs of these companies, like Sundar Pichai is Google CEO, all right. And Satya Nadella is Microsoft's CEO. Palo Alto Networks is also. So you're seeing the migration of the brains from India because they don't get the capital resources. They're moving to the States. Email was invented by an Indian person, but not in India. He moved to the States to create it. The reason we have Gmail is because of him. All right. So you're seeing all this. This is why I respect what they're doing because they teach in the English language for a start. It's very competitive to get into universities there. But once they come out, their network is strong that they help each other. So, but it's all going to be in the US. They're not coming to Canada.
Yeah.
What many people are missing in terms of innovation is you need the preconditions for innovation.
Mm-hmm.
You need an economy that is vibrant, an economy that has, first of all, generally speaking, you need a country with a lot of capital. And to have a lot of capital, you need to have a free enterprise system and an established free enterprise system. China does not have a free enterprise system. It's still a centrally controlled communist country. And so, yes, they allowed the seeds of capitalism to take root in certain areas, but they restrict it. And if you are too successful, they'll take your money away from you. Just ask what's his name?
Jack Ma.
Jack Ma, that's right, who had his wealth taken away from him. So they don't have a culture. Interestingly, before the current version of China existed, it was a very entrepreneurial country.
Yes.
But there's been too many people of an authoritarian nature that have always created friction and has not allowed that economy to achieve its true potential. Whereas in the U.S., they've been allowed to achieve their true potential for a very long time until very recently, with a lot more government encroachment in the private sector. And what we're seeing now under the current U.S. administration is the removal or the reduction of those of government interventions in the economy. And that freedom that's being unleashed by the current administration is going to create more fertile soil for that innovation to continue and attract more capital from around the world, especially with the lower taxes. We're not doing that here in Canada. We have incredible talent in this country. We have incredible access to resources. But we have a government that is trying to keep our resources in the ground. And so this is why we're not getting the same innovation. The U.S. is the last bastion of innovation in the world, and that's why it will continue to prosper.
John, it's also taxation. We
Yes.
overtax here. So what I've noticed by traveling to the Middle East is something just interesting happened about a month or so ago. There's no taxes when you live in the Middle East, Dubai, Qatar, or anything. So I think he's like the fourth or fifth richest man in England. His name's Lakshmi Mittal, right? Well over a billionaire. He just exited England because they raised their taxes and moved entirely to live in the Middle East. All right. And he goes, I'll pay my last tax to you. And then for onwards going, the billions of dollars on taxes I'm paying you is not going to be there because you taxed me to the point that I don't want to be there. And the problem is we will also have that effect. If there's no other source of revenue that the government can make except for you, they'll take it off you. So again, why you need planning.
And it's happening. The entrepreneurs have been fleeing Canada for the last decade under the current government. And that will continue and accelerate unless we get a change in leadership. You need a low tax regime. You need as little economic friction as possible. And our government is all about economic friction.
And we see it at all levels of government. I was driving downtown with my mom yesterday, and she was talking about Olivia Chow, the mayor of Toronto, and one of her most recent brain dead quotes, and it was that she's raising property taxes for the very wealthy because they can afford to pay it. And
Well, let
what
them watch them leave.
Exactly. And that's exactly what I said is, okay, so then what you're going to do is you're going to create no incentive for those people to remain here, to be the innovators and be the employers and the job creators that exist in our society and in our economy, and they're going to be motivated to say, I'm going to go somewhere else where there's less friction so that it makes more sense for me to operate my business and I get to keep more of my own hard-earned dollar than staying here and giving it over to the government. But anyway, that's a separate diatribe that I could spend hours on. But let's circle back one last time on the AI bubble here before we quickly touch upon the future of the financial markets, and that is, so we talked about, you obviously don't believe or buy into the theory that we're in an AI bubble right now, Rana, and
I think we're
so
early stage.
exactly, and so what is your alternative view to that? Do you foresee, that we're going to still be in a fairly healthy growth market for the next couple of years?
Um, if you play the same pattern as we did at the beginning of the internet, so you take the rise of the internet and you overlay the AI on top of it, you'll see that we're very early stage. It doesn't mean that there's not going to be bumps on the way.
Of course.
All right, there will be bumps on the way as the expectations of analysts get the expectation. The word I use for expectation is guesses. The guesses for analysts will be extreme, and companies just can't meet those guesses, even though they will be higher. So let's say an analyst says, "We think you're going to have 35% revenue growth," and instead you turn into 34.
Yeah.
Well, that's a miss, but it's actually not a miss.
Yeah.
All right. But that the reaction to that the miss on that is going to be kind of sharp. So again, the media is going to play a role in creating the volatility. We've got to be there to take advantage of media trying to hit the volatility button. So I believe that it's going to be a good environment for us. We're almost in the world of the Jetsons. All right. We're not quite there, but we're at the world of the Jetsons. Okay, but
I
they'll
look
try
forward
to
to that.
change it. Yeah.
Yeah.
For those people who are uninitiated on this subject matter, the whole AI narrative, bubble narrative was begun by Massachusetts Institute of Technology, or MIT, and there was a rebuttal by George Mason University that is not getting any airplay whatsoever. So the media has decided that this is the view that counts, what MIT advocates, and no other view is worthy of discussion. But if you want a fair and unbiased, objective discussion on the subject of AI bubble or not bubble, you need to read the George Mason University rebuttal on the subject matter. And that is in our newsletter, which was published the last one in November, and also the first one in December. So if people listening out there want to read about this, they should send us an email, contact us, and we'll be happy to send them our newsletter with this information.
All right. So, Rana, let's talk quickly in the last couple of minutes that we have here about the future of the financial services industry. So, it's obviously evolved significantly since you began your career 30 years ago. How do you think the financial markets and the financial services industry will evolve in the future, in the coming 5 to 10 years?
I think people are becoming far more educated and savvy and understanding of investing now. It's not like when we started it, we were just giving new information all, and people couldn't even spell RRSP. All right. So now what's happening is we're becoming a lot more smart. So the advisor would have to be a far more bigger specialist than what they used to before. Before, all they had to do was do mutual funds, and that was it. Now you've got to go beyond that. All right. There's so many better tools that are there now that were never there before. So the industry has to evolve. No longer is it these balanced portfolios are enough. All right. Because bonds haven't worked for a long, long time. Almost 20 years now, bonds have been hurting your return. So this whole thing about, oh, we're going to get the comfort of income from bonds, well, you didn't see that. Maybe they'll work forward. So that evolution has to change. So I believe that the advisor of the future will use more technology to help them better. Okay, you're going to see, I think, more finite, granular towards the customer's needs as to more generalized to, oh, everybody just needs a balanced fund. That was used to be the mantra. All you need is
Yeah.
a balanced fund. Nobody goes wrong with a balanced fund. Well, guess what? People did go wrong with a balanced fund because, they left the ability to
Well,
take advantage of things. So I think
banks
there's going to be a shift to a greater granularity.
banks and insurance companies are still advocating for the one size fits all balanced fund solution,
It makes life
and
easier
that's
for
why
them.
it's easier for them, but that's why they're dinosaurs, and people will not achieve their financial objectives dealing with insurance companies and banks. They need independent thought, and that's what we bring to the table. People like ourselves and Rana, we bring independent thought to the table, and that's what will lead our clients to their objectives and give them the success they are striving for.
Yeah, and I think that's a great place to leave it at. So, Rana, I just want to, on behalf of both of us, thank you for jumping on and providing us with such great perspective and such in-depth analysis for the last 2 episodes here. We really enjoyed our chat. We miss
Thank
getting
you.
to see you and speak with you at the conferences, and so it's always nice to catch up.
I always catch up. Thank you very much. You guys do such a good job. All right, John, I've always enjoyed my time with you and the debate that we've
Likewise.
had.
Yeah,
So,
and Rana is one of
thank
the
you,
few
John.
independent thinkers in the world, and I like associating with independent thinkers.
Before we get out of here, guys, I have a really quick observation that, Rana, I would like for you to comment on, if you would, because a lot of these conversations, both part 1 and part 2, focus on change and our inability to deal with change. And I think one of the things that was underlined in the conversation, and I think one of the things that maybe needs to be underlined again, is that change creates opportunity. Opportunity is what is there for the taking. But it has been my observation, and I might be wrong, Rana. This is where I want you to comment. I think we increasingly live in a risk-averse world. We're increasingly afraid of the opportunity that's created by change. Do you think I'm wrong?
I think the narrative that you've been given by many people, right, and it's not just media here at all, is that change means discomfort.
Yes.
All right. And to the world, the word change is equivalent to the word disease, and disease means dis-ease. All right, dis-ease. So
Yeah, I
when
like that.
you are getting around to doing something, it might be better for you, but it looks difficult. You refer to not do what's difficult, even though it isn't difficult. Think about going from walking to a bike. You go for a bike with those little training wheels on it to a bike with no training wheels on it.
Right.
All right, that's change, but it's unsteady at the beginning, and then afterwards you never go back to training wheels. So similarly, I believe all change, they build it up. Everybody builds it out. Oh, why do you need to do this? Why not? It's only once you jumped over that hurdle that you realize, I don't need to go back. All right, now we don't use our landlines anymore. All right, there's a change right there.
Yeah. No, it's interesting. I use my landline for one reason only, that I have a number that's tied to a number of discount cards. I don't think I've gotten a call on my landline in I don't know how many years.
We use our landline for our relatives from Europe.
Yeah,
It's like, you don't even use it anymore. It doesn't exist. We have no landline in here. The number is there, but nobody can call it.
Oh, I don't know. Well, again, all my discount cards are
Your
like
dad
tied to
uses
that
it to call
landline number.
Batman. He uses landline to call Batman.
This has been a really terrific conversation. Rana, thank you so much for
Right.
taking the
Thank
time
you very
to join.
much. Thank you, John.
Thank you,
appreciate
Rana.
it.
Always great to interact with you.
All right, guys, before we get out of here, I'm just going to ask really quickly, if anybody's listening to this conversation and wants to get in touch with you, what is the best way for them to do that?
best way for them is to send us an email at info@med-wealth.ca or visit our website at medwealth.ca.
And again, that information will be in the show notes for those of you who don't have something to write it down with right at the moment. So come back when you do, okay? The other thing, hit follow. Become a subscriber. If these last 2 episodes haven't convinced you that you should be a subscriber, I don't know what else is going to persuade you. But by being a subscriber, you're notified when any new episodes are released, and you can give those a listen. I would also ask that if you like this podcast, if you really enjoy it, tell people about it. Word of mouth promotion is unbeatable, and we would really appreciate people talking to people, telling them to give a listen to Prescribing Prosperity. Until next time, I'm Bill Tucker. On behalf of everybody at MedWealth Financial, and John and Alex included, thank you for taking the time to listen, and we'll catch you next time.
Thank you for listening to Prescribing Prosperity. Visit our website at med-wealth.ca. That's med-wealth.ca for more information or to connect with us for a consultation. Don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the hosts and their guests and does not necessarily represent the views or opinions of IPC Securities Corporation. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investment advice. Always seek the advice of a qualified and licensed financial service provider with any questions you may have regarding your investment or retirement planning. MedWealth Financial Services can provide a private consultation to help you determine the suitability of any guidance discussed on the show.